Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Meghan Grebner. With us, as always, is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
Oh, we have a lot to talk about when it comes to trade and tariffs and demand, and we'll get into that coming up in just a couple of minutes. But to get things started this week, let's recap what happened in the markets.
Yeah, I think across the board, we can talk about some pretty light movement in all these markets. But when we focus first on the pork side of the equation this week, well, when we look at that current lean hog futures contract, it was also down a little less than 50 cents for the week this week. On the pork cutout value, it was down $1.29 this week. We saw weakness in ribs and hams really leading the way when we look at that weakness in the overall pork cutout value. Pork bellies were up again this week, up a little more than 8 cents on the week, providing some strength on that pork cutout value. If we switch gears and look at the cattle side, live cattle up $3.65 this week on some pretty light trade. If we look at the live cattle futures contract, it was basically unchanged, down slightly for the week this week. On the feeder cattle side, pretty strong feeder cattle markets, although we had pretty limited markets available this week. Feeder cattle sold $5 to $8 higher for the week, while feeder cattle futures were up $1.62 this week in that current contract. The choice box beef price down $5.33 this week. Really, ribs and loins led the weakness on that choice box beef price for the week.
Scott, are we surprised to see this type of, I know we had really limited trade movement and trade action this week, but really for the most part, things are holding on fairly well. We had a pretty bearish hogs and pigs report just a week ago, and we've seen a lot of pressure from outside markets. Is this surprising to see where everything is trading at this point?
Well, it certainly has been perhaps a little surprising, just given all the news that we have coming, both with large supplies of things like pork, as well as then the trade side of additional tariffs coming on in place on a number of products. I think, though, if you look out there at some of those deferred futures contracts, especially on the pork side, they're telling us that the worst is yet to come in terms of where prices head. So we don't want to be too lulled to sleep by what's been a little more price strength of late.
Let's get into that trade and tariff discussion. Mexico and China are the big stories this week. China today implemented its additional 25% tariff on U.S. pork imports. That really puts a pretty hefty tax on U.S. pork going into China.
Yeah, absolutely. All of a sudden, it makes our products more expensive. And when you talk about adding another 25% on U.S. product going into China, that makes that overall tariff 70%. I know how I complain when I have to pay fairly high sales tax, but we're talking about a very different tax that has to be paid here. I think it certainly doesn't bode well for products we've traditionally shipped into China when we see that big increase in tariffs.
How does that maybe impact the psyche of the market just in general, as we're talking about? We know we have this large hog supply. We know we have a lot of beef that needs to move. We have soybeans that need to move. Does that have a negative impact and even add even more pressure, just even taking out of consideration the technical and the actual physical products?
So I think it's added just a lot of uncertainty. You know, we're not used to some of what we've seen happening this year in terms of trade wars. It's been a number of years, perhaps we should say decades, since we potentially get ourselves in this kind of tariff escalation, if you will. And so I think markets have a hard time knowing how to adjust to that. I think in some cases, you know, you're going to get products that move around. So other countries might get more movement into China, and we might pick up some of those markets where they would have moved product otherwise. So you get some change in trade flows. The nuances of all that are very difficult to work through. And so I think markets generally have been a lot more volatile as a result of just all of that uncertainty about exactly what happens at the end of the day when we implement these tariffs. So we know markets, but the degree of how tough it is, I think, is still a little bit unknown, and we'll figure it out here in the next few days if we continue to see these additional tariffs being implemented.
We've talked all along, demand is key for profitability, or even being close to break even in profitability for both U.S. beef and pork producers. We know that there's uncertainty on the global marketplace right now. Domestic demand has remained strong, and it got a little additional support today with the latest jobs report.
Yeah, absolutely, Megan. And we just don't want to undersell how important that domestic market's been for us this year. Jobs report we got today added 213,000 more jobs this month. That beat the pre-report estimates of right around 200,000. Although we did see a little uptick in the unemployment rate out of the report this week, which likely had to do with some of the folks out of college right now looking for jobs, at least over the summer. But by and large, that's really good news that we continue to see strong domestic demand when you think about just the growth in domestic supplies of both beef and pork that are going to be coming to the marketplace this year.
How much does domestic demand need to, I don't want to say increase to absorb all of the potential disruption in global demand, but is there a line that we're seeing that we need to make sure we stay at or above to keep product moving here in the U.S.?
Yeah, boy, you ask a really tough question. I think when you look back at 2017, and I'll talk about demand a little bit different from consumption. Demand was so strong, so we moved the amount of meat we did at much higher retail prices than maybe many of us would have thought, due to what we think was a demand curve that was shifting to the right, or stronger demand. When you think about that for 2018, much of the same things at play. We're going to consume additional pork and beef here in the United States in 2018, likely as a result of increased domestic supplies and perhaps weaker exports here in the second half of the year. For me, it's what price clears those markets. And if demand can stay strong, those prices likely stay at levels that are more palatable for the supply side of these industries.
Scott, anything else this week? It's a short holiday week, so it takes a little bit out of what we have to talk about, but anything else?
I think we'll just have to continue to watch on this tariff escalation front. That to me is one of the very critical things affecting these markets, and the uncertainty will certainly play out in the marketplace here, I think, in the next several days.
And looking ahead to next week, what do we have next Friday to talk about?
Yeah, so we're going to get some monthly trade data out of the gate on Monday. Also, USDA will give us their monthly WASDE report out next week. We'll get retail prices, and then again, a consumer confidence estimate to close next week.
All right, Scott, have a great weekend. We'll talk to you next Friday.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. Stay cool. We'll talk to you next Friday. I'm Meghan Grebner on Brownfield.